We'll be looking at the latest figures from the MBS. Good morning, sir. Thank you so much.
Good morning. It's a pleasure to be here.
Now, I'm looking at the numbers, and even I was surprised when the the figures came out from the MBS yesterday. Now, of course, all kinds of explanations, all kinds of theories have emerged from this latest figure. The most top on the list is what some analysts are saying, that with the partial deregulation of the oil prices, the fact that partial deregulation of oil prices, that it has actually affected the real disposable income of Nigerians, because Nigerians or consumers are now having to spend more on fuel prices. That leaves little for them to spend on other things such as food. We also saw the food index coming down to around 12% from 13%. What do you make of this?
Well, I'm not surprised about the reduction, because when we had the partial removal of fuel subsidy, there was that initial impact on prices. Prices went up dramatically, virtually across the board. But the way these things work is that as the demand and supply factors or forces interact, prices will eventually settle at a point you can regard as an equilibrium level. You know, the first round of impact we had on prices evidently was not sustainable. I know that if people raise prices of their products and there is consumer resistance, again, consumer resistance varies from product to product. Products that are not so critical, consumers will resist. They either cut off the demand for such products completely or reduce the demand. And as demand reduces, it places pressure on prices. So what has happened is that with the fuel subsidy, partial fuel subsidy removal, prices went up generally. But as demand and supply forces interact, some of those prices turn out not to be sustainable. And that is what we are seeing. What we are seeing now is more of a price adjustment which is determined by the forces of demand and supply. Two critical factors are responsible or could explain the Nigeria inflation. First, the supply side factors, which has to do with the structural issues in the economy. Bottlenecks in supply, cost of production, cost of logistics, transportation, and so on and so forth. That is a major component or a major factor in the inflation that we see in this country. Because if you have a situation where your cost of production is high, you are in business to make money anyway. You cannot sell less than your cost. Therefore, it is the cost that will determine the price. And as you know, Nigeria is a high-cost economy. So that is a major factor in the Nigerian inflation. And that is where it has always been, and that is where it will always be for a while, until we are able to deal with the structural bottlenecks in this economy. The second major factor is the macroeconomic management issues. This has to do with monetary growth, because the way we manage the macroeconomy will determine the growth in money supply. And once you have a high growth in money supply, prices will generally go up. We have issues, for instance, with growing deficits. As deficit increases, prices will normally increase, because deficit, particularly in our own economy here, leads to increases in money supply. And once you have that, prices generally across the board will increase. Then there's also the component of the monetization of oil receipts. And that is why we see that most of the time when we have high oil prices, inflation normally goes up.
Because there's more money floating around?
Because there's more money, because there's more oil money to be monetized. In other words, all the incomes that are received by government from the oil sector, you know, these things come in foreign currency. They have to be distributed in local currency. So in the process of monetizing the oil receipts, we have the creation of what we call high-powered money in the system. And once you have that, normally you also have inflation. And that is a major factor also in Nigerian inflation, the monetization of oil receipts. Because it is high-powered money. The more oil money, the more oil revenue you have, the more naira that you are supposed to make available to all tiers of government.
Okay,
so the issues really to worry about when we talk about inflation are the structural issues, which has to do with the supply bottlenecks that we have and the cost of production in the economy, and the macroeconomic management, which has to do a lot more with the growth of fiscal deficit and the monetization of oil receipts. So these are the areas that I think we should look at if we really want to deal with the problem of inflation.
Now, the food inflation, is usually the highest contributor to headline inflation. Now, going back to December, we know December, it's a festive period. Many people hit the markets to buy more than they usually would, from the preceding months. And we do know that it's also a time when food sellers and some other service providers perhaps hike prices just in the spirit of the season. Perhaps that figure that we had then around between 12 and 13%, that also came down to 13%, came down to around 12% in January. Perhaps that also influenced the headline figures coming from them. Perhaps it was a little bit artificial, and now we're beginning to settle down into what the real figures should be. And then, of course, we had the partial deregulation of the oil stream sector. Do you agree with that?
Well, that could be true to some extent. But the key factors in food inflation has to do with the seasonality of food production. The trend has always been that anytime we are close to harvest season of either cereals, the basic food items, there's always that trend. As the food production increases, prices normally come down. And one of the reasons we have that is that the storage capacity in the Nigerian agricultural sector is very weak. It's very minimal. So what happens is that each time there is harvest, all the products of the harvest are offloaded into the market. Because most of the farmers don't have the facility to store these things. And what you observe is that prices come down significantly at that time. And when you get to the off-harvest season, prices also goes up. So the main factor really in food inflation has to do more with the seasonality of agricultural production. And don't forget that the structure of agricultural production in this economy is rain-fed. So you don't have a situation where you farm all the year round because of the advancement of the sector. So it depends on rain. So as you approach rainy season and things like that, agricultural production increases and therefore prices come down. Another critical factor in food inflation is transportation. Agriculture is a rural-based activity. And you need to see the condition of the roads of some of these rural communities. They are horrible. You have situations where it will cost you more to transport maybe a truckload of food items than it will cost to buy the food items.
So if that's the case, if we still have that situation going on, add the fact that with the partial removal of fuel subsidy, of course, that drove up the cost of fuel prices. Yeah, that, of course, would increase transportation costs.
It is a contributing
factor. You also did say that some consumers might come up. You talked about resisting some the cost of some food prices. Now, for the essential ones, the ones that Nigerians cannot do without, especially the perishables that we go to buy every day. Wouldn't I want to imagine or believe that those ones also went up? So shouldn't that still have a significant impact?
Those ones also went up. But I can tell you that even for those ones, once we get to the peak of the production, they will come down. Certainly, that is the way it works. Because the agricultural value chain doesn't have that system to retain or regulate the rate at which the supply flows into the market system, because of the constraints on storage. And once you don't have that, each time there is big harvest, you have an explosion in supply. And from the elementary principles of demand and supply, once you have the explosion in supply, prices will drop. So the seasonality factor is still there. That does not detract from the point you are making.
So the
fuel subsidy thing is also a factor. So
you do not agree with what some analysts are saying, that with the now that Nigerians have to spend more on fuel prices, that has affected what the amount they will spend on other items?
No, I don't. It's a point, but it's not a fundamental point in this equation. It is not fundamental.
Okay.
It's not fundamental.
Okay, interesting.
Yeah.
Now, of course, another issue is the fact that with this latest inflation figures, which has come down, that would impact on the decision that MPC members will take today when deciding on the key interest rate. Do you agree with that also?
Yeah.
What direction do you say?
No. It should affect it. It should affect it because the inflationary situation is coming down, but we are not sure how sustainable this is. Just as I said, I see it more as a factor of price adjustment following from the fuel subsidy removal, as against a trend that is sustainable, because the fundamental factors that drive inflation are still very much there. The supply bottlenecks are still there. The cost of energy is still high. Transportation costs are still high. Then we also have the side of the monetary policy management.
So do you see the central bank holding rate at 12% today?
It is likely that it will be retained at 12%. It is likely.
And going forward, we're in March right now, because I know the central bank governor did say that between now January and June, he expects inflation to hit about 15%. Do you think this is something that would happen? Or because I'm sure perhaps even he was surprised at this latest figures. But like you said, it's a correction. So what kind of numbers should we be expecting?
Well, I don't foresee any dramatic increases in inflation beyond the threshold that we have now. Because as we move into the rainy season, we're likely to see improved harvest. And I think there have been some meteorological prediction that
we're going to have a robust rain season.
And once you have a robust weather condition, agricultural prices will drop because production is likely to increase. And the food basket is a major component of the computation of inflation. So I think we will still remain within the threshold of 12-13% in my view.
Okay, now I know that today when the committee members will be looking at the indicators in the economy, they will also be looking at the foreign exchange market, because one of the mandates of the CBN is to ensure exchange rate stability and price, of course, keeping the naira under control. Now we've seen the naira since the beginning of the year actually strengthening against the US dollar. Of course, that is because there hasn't been that surge for the US dollar that we saw in the later part of last year that pushed the naira very high. So what do you think the central bank will be saying in terms of its stance on the naira? Do you think what kind of policy would the central bank be looking to take for the naira, or how do you think that's going to influence its decisions?
Well, the CBN has been, at least under the current governor, has been very particular about ensuring the stability of the exchange rate, and that perhaps explains all the tight monetary policy stance that we have seen over time. Actually, it's more as a result of even exchange rate as opposed to even inflation. We are likely to see the sustenance of that kind of trend, ensuring that we have monetary conditions that ensure the stability of the exchange rate. But as the fuel marketers come into the market, because between January and February, the tempo of activity in terms of the demand
for the dollar, that's another strong argument.
Yeah, for the purpose of fuel importation has reduced significantly. But now that the policy terrain is now clearer and there has been a budgetary provision for subsidy, we are likely to see an added pressure in the market, in the foreign exchange market.
So are you saying that what we're seeing now, where the naira is right now, is a little bit artificial? Because when active importation starts, are we going to see that kind of pressure that we saw? Because there will definitely be demand for
likely to see that kind of pressure. We are likely to see it.
Now we're looking at Nigeria's domestic debt profile. I still have the Director General of the Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf. Now, right now, Nigeria has a domestic debt profile worth about 5.6 trillion naira, made up of federal government bonds, treasury bills, and treasury bonds, and all of that has totaled around 5.6 trillion. Now, we're going to be looking at the impact on the economy, and if we're going to continue to borrow, how all of that would affect the economy. Also know that the budget deficit still stands at around 1 trillion naira. We're going to continue to borrow to help plug this gap in the budget. Thank you for being here. Now, looking at this debt, we have federal government bonds as of December the 31st this year. Federal government bonds, looking at the total debt stock, 3.5 trillion naira. Nigerian treasury bills, 1.7 trillion naira. Treasury bonds, 353.7 billion naira. And that brought the total to 5.6 trillion naira. Now, we have a budget deficit of about 1.1 trillion naira, and we do know that one of the means that the federal government funds its budget deficit is by issuing bonds every month through the Debt Management Office. What do you make of this? What are your thoughts on this?
Well, there are three components to the issue of Nigeria's debt. There is the domestic debt component, there is the external debt component, then there is what we call contractual arrears. The domestic debt component, I think, is the one that currently gives a very big cause for concern, because it has been growing at a very disturbing rate, which is why in the budget the sum of over 500 billion naira has been set aside for debt servicing. Similar figures were also budgeted last year for purpose of servicing debt, and the bulk of the debt service payments are on domestic debt. That amount is almost half of what we use as what we budget for capital expenditure. So in terms of the opportunity cost of what we are using to service this debt, it is very high for the economy. And what I mean by opportunity cost is what we will have otherwise used the money for.
So you recommend that we spend less to service our debt and pile on? Because I'm looking at over the long run, you know, because the earlier we service...
No. You see the thing is that the less debt you incur, the less the burden you put on the economy for servicing the debt. That was what explained the exit from external debt that we did. Was it in year 2000 or 2001? The whole idea was to reduce the debt stock. And that was why the government at that time committed huge sums of money to reduce the debt burden. I'm saying this, at least if the awareness is there that we need to reduce the burden of debt on this economy, I think that is one step forward. Because we have a situation where we are spending 0.5 trillion to service debt annually. And you have challenges with power, you have challenges with your health institutions, you have challenges with the educational sector, you have challenges with railways.
But most of those money, or a lot of the bulk of that money, those monies being borrowed, are going into massive, infrastructure projects.
Not quite. Most of these funds are used to service the very bogus political structure that we have. That is the issue. You see, most of it is the bulk of the external debt. Recently, at least some loans were
taken from the
World Bank, ADB, and so on. The bulk of the multilateral debts are used for development of infrastructure. But most of what you see in domestic debt are used to service the operations of government. That is why we have the kind of huge recurrent expenditure that we have. Because the whole idea is to use this deficit. You mentioned it, that the deficit in the budget is over 1 trillion.
But our developmental needs will cost us a lot. It will take years, and it's going to cost us to fix.
It's going to cost us. You see,
and we must borrow.
You have to borrow. But we don't have any evidence before us that the bulk of these domestic debts are for projects. You see, they are more for the operational expenses of government. And that is why it has always been an issue that the size of government is too large across all the tiers of government and across all levels of government, from the local to the federal. So it is putting a lot of burden, particularly on the recurrent side. What percentage of our expenditure are we using for capital projects anyway? We are just struggling to push it now to 30%. And you use 72% or so for recurrent. That is to show you that the bulk of these funds that are being borrowed are being used to service the very big structure of governance that we have at all levels of government. And also, there's also the component of corruption anyway in all of this. So it is necessary that we begin to scale down the debt portfolio, particularly domestic debt.
How much of that should we scale down? How do we strike a balance where we can comfortably pay for interest on these bonds, or fund some of our infrastructure projects and ensure that that doesn't affect how much it impacts on the economy generally?
Well, the finance minister has laid out a plan of how to, over time, reconstruct the budget, so that you have a greater percentage of the budget going into capital. You see, the issue is sometimes not so much the debt, but what you use the debt for.
And what in terms of return, what comes back to the economy? What
comes back to the economy? But the structure that is on ground now is that the bulk of these debts are being used for purpose of running a very unsustainable size of government. And another very important point here is the cost at which government is borrowing. The cost of government borrowing in Nigeria.
The federal government bonds.
Yes, bonds and treasury bills is perhaps the highest you can find anywhere in the world.
And it's between about 14 and 16%.
14 to 16%.
Well, they have to make the bonds attractive.
Yes, but you see, the danger in that is that first, it increases the cost of servicing the debt. You can see the kind of numbers we are talking about now. Over 500 billion. Second, it crowds out the private sector. Because if a financial institution or an investor has some money to invest, and you know that, well, if you put it in government bonds, you get so much. Why will you put it in fixed deposits? Why would you want to go and invest as a small scale industrialist, for instance? And what we have seen now, at least with the current yield on government securities, is that there's a lot of flow of credit now away from the private sector into government. Because it's now more attractive to buy bonds and buy treasury bills than to fix your money in the bank. And it is the money that is in fixed deposits that the banks can make available to entrepreneurs, small businesses, and the large corporates. Even the banks now find it more attractive to invest in bonds and treasury bills than to give credit to entrepreneurs. Because for one thing, the government securities are almost zero risk. So if you have a debt instrument that the risk is low or even near zero, and the rate is as high as 14-16%, for goodness sake, why must you worry yourself giving money to one industrialist who will come and be telling stories about cost of diesel or the challenge of Chinese products in the market? Why will you go and fix your money in a bank where you'll be given maybe 6, 5 or 4%? You have to go and buy treasury bills and buy bonds. So you have a situation now where more or less the government is virtually cutting away all the credit in the funds in the market because it's more attractive. Even foreign investors, a lot of foreign interests are now coming into it. Rather than come and invest in the real economy, they go and buy treasury bills and bonds and go to bed. The rate is attractive, the risk is low. So that is a major implication. So it is necessary for government at least to begin to review this. It is good to have a rate that is attractive. It is good to want to develop and deepen the bond market. But we should not do that at the expense of the larger economy. at the expense of crowding out the private sector. Because if the government rate is as high as 16-14%, then there's no attraction there's no incentive to lend money to businesses.
Well, what would you have the federal government do? Go back, just reduce the rates to
they should reduce the rates. Yeah, it should be reduced. This is the first time these things are as high as what we are saying now.
You think the stakes are higher this time? What do you think informed the decision of the federal government to offer bonds this high?
Well, it could be just to fill the deficit gap. It's part of borrowing. It could also be for the purpose sometimes of mopping up liquidity in the system.
Now, with the deficit of around 1 trillion, we're looking at some reports from some analysts, and they are saying that with this deficit of 1 trillion, obviously we're going to use bonds to fund this deficit. And they say that it implies that the total domestic debt may hit around 6 trillion by the end of 2012. Are we on a sustainable path? I mean, if we're going, I know it was actually reduced from last year to this year, but now with this deficit, funding this deficit, we might actually go higher.
We are not on a sustainable path. Although I've listened to the Debt Management Office, they have argued about this sustainability issue. They look at the debt to GDP ratio and tell us that, well, the threshold at which you should begin to worry is maybe around 30 or 40%. But we are still somewhere below 30%.
Yes, we are.
But what they fail to realize is that when you use the model of debt to GDP ratio, you are looking at a GDP that has the capacity to help in the servicing of the debt. But if you look at the structure of the Nigerian GDP and the components of the Nigerian GDP, you see that not all the major components of the GDP have the capacity to generate revenue to service the debt. The largest component of GDP is agriculture. How much revenue are we getting from agriculture?
In terms of tax? If it contributes 40%, isn't that significant?
No, we are talking of GDP now.
Okay.
I'm talking of revenue. Because to service debt, you need funds. We are talking cash.
So you're saying there's so much reliance on this oil, what we get from oil in terms of...
No, what I'm saying is that there is an illusion of a sort of using the parameter of saying debt to GDP ratio.
Okay.
Globally, that is what is used. What I'm saying is that if you look critically at the components of the GDP, you find out that it is a faulty parameter to use. Because if you take away the agricultural sector from the GDP and you now compute the debt to GDP ratio, you should be talking of a ratio of close to 60 or 70%. Because the agricultural sector does not contribute any significant revenue for which you can use to service the debt. And the whole idea of debt to GDP ratio is to look at the sustainability of the debt. What is the capacity of the economy to service the debt? That is why you use the ratio. But the structure of Nigerian GDP is such that a major component of the GDP does not have the capacity to contribute to revenue. I don't know whether you have followed.
Yes.
So we have to look at all these things critically. And my take is that our current debt profile is not sustainable at all. If you look deeper at all these parameters that I've mentioned.
So where do we go from here? I want to believe that the finance minister is aware of this. I mean, she made a statement last month when she was on a road show to talk to some investors to bring money into the country. And she says that she watches our domestic debt profile like a hawk. So I want to believe that she's very much aware.
She's very much aware, but there is no evidence that something drastic is being done. We are still going on borrowing spree.
Is it a borrowing spree?
Of course. No, don't tell me it is necessary. What are we using the money for? Look at the state of infrastructure. Look at the budgets. How much are we budgeting for power and all this critical infrastructure? Look at the ratio of recurrent spending to capital spending. You know? It's a different thing if you lay out some critical projects and you tell Nigerians, we know that yes, this spending will contribute in a way to improving the productivity of the economy. But look at the numbers. Look at the ratio of recurrent to capital. Look at the amount that is being spent on personnel. Look at the amount that is being lost to corruption. These are leakages. So if you are borrowing to service all these outlets, then we have a problem.
Well, hopefully, I hope that the lawmakers are listening, and of course they would take this into consideration and perhaps look deeper, as you said, into the numbers. We have to end it there. Thank you so much, sir, for being on the show. Thank you for your contribution. I have been talking to the Director General of the Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf. He's also an economist, and we have been looking at Nigeria's domestic debt profile. 5.6 trillion naira is where we're at right now, and with a budget deficit of about 1 trillion naira, many analysts say that they believe that this domestic debt profile will continue to rise and may not be sustainable. Well, like my guest has said, he believes that it's not sustainable. So perhaps this is something that the Ministry of Finance could look into. Well, that's a wrap on today's edition of Business Morning. Thank you so much for being a part of it. Channel's news track is at the top of the hour. Bye for now.